Hello, thank you for joining us today on the Profit Scale Thrive podcast, where we guide attorneys to overflowing profits, scaled growth, and thriving lives. I am your host, Kelly Brubaker. We have a secret though. This is a special place because we don't work with every law firm owner. We support the solo attorneys who are also single parents because we know the special challenges you face, and we know the business advice out there is not always practical for you and your firm. Each week, we will talk about things that will give you the insight you need to stop feeling overwhelmed, to gain back your confidence, and to finally enjoy your law firm and your life again. Welcome back to episode number 25. Today, we're talking about a big phrase, segregation of duties. And it might sound fancy and something that only big companies need to worry about, but it's something every business needs as soon as there is more than one person working in the firm. It's about making sure that no single person has all the power over the law firm's money. So think of it like this. You wouldn't let one person be the judge, jury, and lawyer in a courtroom, right? Similarly, in a law firm, you don't want just one person in charge of all the money stuff. This helps prevent mistakes and keeps everything fair and straight. And think this can happen to you? I've seen it over and over again as I talk to business owners from all industries of varying sizes. I have cases that I've been personally involved in as a forensic accountant over the years, but here's a couple of examples that hit the headlines just this year in 2023. The first one, paralegal is charged with embezzling $1.5 million from law firm's clients. Jennifer Elaine Rourke, 54, of Hickory, North Carolina, was indicted on wire fraud charges for embezzling more than $1.5 million from the clients of a law firm where she was employed. According to allegations in the indictment, from 2007 to 2021, Rourke, who is also known as Jennifer Claviera, was employed as an assistant and a paralegal for a law firm in Hickory, North Carolina. The law firm handled, among other things, the administration and management of trusts for clients, including the trust's bank accounts. And as part of her duties, Rourke was responsible for opening the mail, depositing checks into trust bank accounts, and processing invoices. As alleged in the indictment, from 2015 to 2021, Rourke misused her access and position with the firm to embezzle more than $1.5 million from the trusts of the law firm's clients. Rourke executed the embezzlement scheme by making hundreds of unauthorized wire transfers from the bank accounts associated with the law firm's client's trust into bank accounts controlled by Rourke. Rourke allegedly used the embezzled funds to pay for personal things, make mortgage, car, and credit card payments, and to fund an extravagant lifestyle. Second example, San Mateo man charged with embezzling more than $1.1 million from San Francisco law firm. A federal grand jury in San Francisco indicted Jero Thomas Santos with bank fraud. According to the indictment, reference CR 23-00230 WHA, filed July 25, 2023, Santos, aged 42, formerly of San Mateo, California, allegedly embezzled more than $1.1 million from his employer, a San Francisco-based law firm, where Santos worked as the office manager. According to the indictment, Santos began his embezzlement scheme no later than March 2016 and continued it through February 2023. As part of the scheme, Santos obtained checks from the victim law firm, filled out the payee line to those checks, addressing them to Jero Santos, and signed each check with the signature of the law firm's senior partner, even though Santos was not authorized to do so. Santos then deposited those checks into his personal checking account at Wells Fargo Bank. Between March 9, 2016 and February 2023, Santos allegedly deposited approximately 806 unauthorized checks from the victim law firm made payable to Santos into his personal checking accounts. The total value of these unauthorized deposits was approximately $1,191,683. Further, As part of the scheme to defraud, Santos made and deleted entries in the general ledger for the victim law firm that concealed the fact that payments were made for Santos's own use. The indictment further alleges that Santos deposited these checks from the victim law firm, knowing that payments were not authorized by the firm or its senior partner, and knowing they exceeded the amounts he was legitimately owed by the firm for his salary and expenses. Now, both of these cases are currently in the indictment phase and pending trial, but they're out there and they can happen to you. So let's talk about the benefits and even some detriments of segregation of duties and what examples of how this control would look like in your firm. So let's start with the benefits of segregation of duties for your firm. The first one is prevention of fraud. By ensuring that no single individual has control over all aspects of any critical financial transaction, it reduces the chance that mistakes or intentional fraud can occur without detection. Number two, accuracy and reliability of financial records. Mistakes are less likely to happen when more than one person is involved in a process. And this ensures that financial records are accurate and reliable, which is particularly important for law firms in terms of billing, receiving payments, and managing client trust funds. Number three, operational efficiency. While it might seem counterintuitive, segregation of duties can actually streamline processes. By clearly defining roles and responsibilities, there's a reduced chance of overlapping tasks and confusion. Employees know their specific roles, making training more efficient. Number four, increased accountability. Segregation of duties ensures that there's a clear trail of who did what. If there's a discrepancy, it's easier to trace back to the source. And this promotes responsibility among employees as they're aware that their actions can be audited. And the last benefit, risk management. For law firms that may handle large amounts of money or sensitive information, segregation of duties provides an extra layer of security and protection against potential lawsuits or claims of negligence. And just to be fair, there are some things to consider when implementing segregation of duties. Increased costs. Implementing segregation of duties can require more personnel as tasks are spread out among multiple employees. This can lead to increased salary and training costs. Number two, complexity in implementation. It can be challenging to clearly define and segregate roles, especially in smaller firms where employees might already wear multiple hats. Number three, potential delays. Having multiple people involved in a process could lead to potential delays, especially if one person is absent or there's a miscommunication. Number five, resistance to change. And this is the one I see most common. Employees might resist the changes, feeling that their autonomy or trustworthiness is being questioned. And the last major consideration, over-reliance on segregation of duties. There's a potential risk that management might over-rely on segregation of duties as the primary control mechanism, neglecting other important financial controls. So hopefully I've piqued your interest in the subject. So what can you do to adopt segregation of duties in your firm? Okay, here's 10 examples. Number one, the person who authorizes a transaction should not be the one to process it. Number two, the employee who receives payments should not be the one reconciling the bank statements. Number three, the individual responsible for billing clients should not be the one collecting payments. Number four, the person who requests a purchase should not be the one to approve the purchase. Number five, the employee maintaining client trust accounts should not be the one dispersing from those accounts. Number six, the person responsible for physical custody of assets, for example, cash or checks, should not be the one maintaining the related accounting records. Number seven, the employee entering financial transactions into the accounting system should not be the one to review or approve them. Number eight, the individual who prepares checks should not be the one signing them. Number nine, the person who approves write-offs should not be the one who posts them. And number 10, the employee handling petty cash should not be the one reconciling petty cash. So Even places that are supposed to be about fairness, like law firms, can face problems with money that if they're not careful. It's really important for all businesses to have good rules about who can do what with money. These rules are like a safety net that keeps the firm and everyone who trusts it safe from money troubles. So, whether it's a big company or a small one, having strong money rules is a smart way to stay out of trouble and keep everyone's trusts. Now it's time for our listener's question of the week. So, Lindy asks, I have multiple loans and forms of debt. How do I pay it all off? Okay, Lindy, slow and steady wins the race here. Pay all the minimum fees out of your operating expense account. Then use any remaining money you may still have in the operating expense account after paying off all of your other bills to pay off your smallest debt as fast as you can. No matter what, keep doing your profit allocation of profit first every 10th and 25th or whatever your allocation frequency is. I know this sounds crazy since you have debt to pay, but you must build up that habit of always taking your profit first. Then, when you do your quarterly profit distribution, take 95 to 99% of that distribution money and use it to crush one of your debts. The remainder, 5 to 1%, is going to be used for you to celebrate. This process has you constantly chipping away debt from your operating expense account and then quarterly hitting that debt really hard. It's kind of like boxing, jab, 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 and then a massive right hook. I hope this helps. But if you have any more questions or follow ups, don't hesitate to reach out. And if you have a question you would like me to answer, you can email me anytime at podcast@profitscalethrive.com. Thanks. This week's inspirational quote is from Anonymous. Progress. You might not be where you want to be, but you are not where you used to be. Final thoughts for today. Throughout my career, I have seen so many people screwed by those they trusted in their business, both employees and contractors. Business owners are so focused on growing their business and client satisfaction that as they begin to delegate control, they do so without putting controls into place to prevent or quickly identify issues. A little planning will reap major benefits. From the list of 10 examples I provided, picking 2 or 3 of them and implementing them immediately will work to protect you and your firm. And before I sign off for today, for listeners of my podcast, you have an opportunity to get a copy of my newly published book for free. It's called Stop Struggling and Start Thriving, a guide to transform your law firm. You can download the free PDF now. I'll leave the link in the show notes. And also, it's available for purchase on Kindle or paperback, and I'll leave that link in the show notes as well. If you have any questions about today's episode, please feel free to comment if you're watching on YouTube or send me an email to podcast@profitscalethrive.com. If you know someone who might need to hear this information, please share this episode with them, or if you're on YouTube, tag them below. Be sure to follow and subscribe to get notifications for future episodes. Did you enjoy this episode? Please consider leaving a review. And before I go, remember profit is something you intentionally plan for in the beginning. It is not a potential bonus at the end of the year. Thanks and have an amazing day.